In the energy quadrant, taking a look at October crude, which broke 66 today. Crude hit its lowest level since May 4th of 2023. May 4th of 2023, by the way, happened to be the low of an almost 24% down move that started on April 13th. But after that low was made, WTI crude oil jumped 7.7% in that very same session to finish nearly unchanged, and subsequently rallied 49.3% to the high point of 2023. Now, today doesn't look like that at all, as we're in the midst of a 10-session down move, where 8 of the 10 sessions have finished with a negative change on the day, 2 of them with a positive change on the day, and today we're finishing near the lows. The low today in the October WTI futures contract, 65.27. That was down 5.01%. The high today, 69.08, was up a little bit more than 0.5%. And looks like with a little bit of time left in the session, we are going to end up above 66, but still down about 3.86% on the day. The OPEC report dropped today, and OPEC dropped their 2024 and 2025 crude oil demand growth forecast for the second straight month in their September oil markets report. They dropped growth expectations to 2.03 million barrels per day from 2.25 million barrels per day. That's for 2024. And 2025 demand growth was revised modestly lower from 1.78 million barrels per day to 1.74 million barrels per day. They're still well below the EIA and the IEA demand forecast, growth demand forecast, that is. And then we look at the CapEx situation here in the US, and US regional banks have been picking up the slack in fossil fuel lending, according to Bloomberg, that's been abandoned by many European lenders. They've either shrunk financing for fossil fuels or pledged to shrink it in terms of their exposure to the sector. And this could mean more CapEx, since there are lenders that seem to be willing to fill that gap. So that's something that could help supply medium to long term and maybe put more pressure on crude oil.